Today I will teach you a profitable strategy to trade gaps on gold. I will explain how to predict the exact moment of a gap fill and how to identify an accurate confirmation entry signal. Take notes and let's get started. And I want to start with explaining why gaps on gold occur. Most of the gaps that you see on gold are opening gaps. These gaps form exactly after the market opens after the weekend. These gaps form because of the occurrence of impactful news while the market is closed. And the market makers are trying to price in this news, creating the gaps. That's the example of a gap up opening on gold. It was formed because of the announcement of Trump on Sunday when the market was closed. He announced 10% tariffs on goods and services from Europe and the UK. And gold priced in this news, forming a gap up after the opening. Now let's briefly discuss the main elements of the gap. That's a model of a gap up. The level where the last candle closed before this gap was formed is called gap opening level. The level where the first candle opened after a formation of this gap is called gap closing level. The area between gap opening and closing levels is the gap up itself. And that's the structure of a gap down, with gap opening and closing levels composing the gap. Most of the gaps are filled. We see that the gap up is filled when the price drops to a gap opening level. And here you can see how exactly gap fill looks. Don't miss my next free gold forex trading signal. Subscribe to my Telegram channel now, the link in the description below. After a formation of a gap down, we'll expect that gold will fill that. And when the price reaches a gap opening level, we see that the gap is filled. The main problem in trading gaps is to predict when exactly the market will fill the gap. Very often the price will pass a substantial distance before returning to a gap opening level. And this strategy will help you to accurately identify that event and of course identify a potential reversal zone. This price model will help you easily trade gap downs on gold. I recommend using this model on an hourly or 4-hour time frames. After formation of a gap down, wait for a test of a significant liquidity demand zone. After a test of a liquidity zone, you will need to wait for accumulation and consolidation. The price should start respecting some minor resistance. Your signal that gold is ready to fill a gap down will be a bullish breakout of this resistance and a candle close above that. Open a buy trade immediately then or set a buy limit order on a retest of a broken resistance. Set your stop loss below the lows of a consolidation and your take profit will be a couple of pips below a gap opening level. The same model and strategy will be used for trading gap up, and this model will work perfectly in trading gaps up on gold. And again, I suggest using that on a 4-hour or an hourly time frames. After formation of a gap up, wait for a test of a significant liquidity supply zone. Then wait for a start of a consolidation on that. The market should start respecting some minor support. Your signal that gold is ready to fill the gap is a breakout of that support and the candle close below that. Sell the market immediately then or set your sell limit order on a retest of a broken support. Your stop loss will lie above the highs of a consolidation and your take profit will be a couple of pips above a gap opening level. That is a gap down opening that gold formed after the market opening on Monday. I was patiently waiting for a signal to buy gold, expecting that this gap would be filled. And that was the signal. After I spotted a signal and after I took the trade, I sent a free signal on my TradingView page and on my free Telegram channel. I also explained that setup on a live stream with my Trading Academy members. Please check the recording. This morning on gold, when I started analyzing the charts, I spotted that the market opened today with a huge gap down opening. Here is a huge gap down that the market formed, and as we always discuss, when we see such a gap, there's a very high probability that such as a gap is going to be filled. And the only problem for us is to understand the exact moment when the market will start filling this gap. As you can see, after this gap down was formed, the market continued falling and the price tested this significant liquidity zone. You can see that we have a huge horizontal demand zone right here that the price tested. And with this bearish candle, we even got a trap below that. What we usually see after the formation of the gaps is that the markets always seek liquidity. And when the price formed this gap down, the market was simply looking for liquidity within this quite huge demand zone. Then, as you can see, with this price action on an hourly time frame, the market started to respect this intraday resistance. You can see that it became quite a strong horizontal resistance that the market respected, and from where the price dropped, setting a new lower low, lower close. This morning, then we formed a bullish imbalance candle. The price formed a strong bullish candle, and with that the price successfully violated this intraday resistance. This intraday resistance was broken, and after breakout it turned into a strong support. That was a very perfect area to buy gold from. That was a very perfect area to buy, and that was the area from where I bought expecting a bullish movement. So this strong bullish candle provided a clear evidence of the strength of the buyers. It provided a clear evidence that the market is ready to fill this gap. So this morning a long trade was taken on a retest of that structure. We have our gap opening level right here, so it is the target for the trade, and stop loss is lying below the lows right here. So with that trade I have around 1.1 reward to risk ratio. Only at night the price successfully reached the target. And a quick update for our yesterday's gap trade on gold. 1 a.m. my local time, the price finally reached the target, and as you can see, the price started to fall sharply immediately after the gap was filled. And that's a complete breakdown of that trade. And as you can see, our broken resistance is quite wide. Your entry can be any price level within that zone. Choose a price level depending on your desired reward to risk ratio for the trade. With my trading style, I need at least 1.1 reward to risk ratio. That is why my entry is so low. Gaps always provide profitable opportunities in gold trading. Recognizing the correct moment to open the trade is the key in making good money with gaps. I hope that this strategy will help. Don't miss my next free gold forex signal. Subscribe to my free Telegram channel now. The link in the description below. Also, traders, please watch my other videos.